Hello, welcome to another guest lecture. Today is the 18th of March, Wednesday, 18th of March, 2020. Very interesting times. We're in the middle of corona crisis. The virus is spreading. We're all in lockup. And these are very interesting times, in particular for our subject today, that our guest speaker, Dr. Drago Indjic, is going to speak about, which is Fintech and Wealthtech. Drago and myself, we've been friends and business associates for many years. He has lectured even at Regent University in the past. He's got a PhD from University of Beograd in Serbia, and then a PhD from Imperial College in engineering. And he's been in fund management and fintech and entrepreneurship for many years. And I'm very pleased to have him today. We're going to do this more as a guest, less as a guest lecture, more like an interview type. It's the first of probably many to follow, because I think the world is changing. So not just the fintech topic is interesting, but also the way we're probably going to teach finance and other disciplines in the future using more technology. I've been using technology for many years myself, as somebody who was interviewed on television, but also organizing lectures and other things. But obviously now this is very topical, and I'm pleased now to introduce Drago to us. He's going to speak about fintech, and I will ask from time to time little questions. And go ahead, Drago. Welcome to Regent University, the Wealth Management Lecture Series 2020.
Thank you, Jacob. I'll just remind you that we've spent 20 years in hedge funds together, and I've covered many quantitative strategies and a few funds. And around 2013, 2014, I switched to fintech. And I helped ETF-Matic, which is a robo-advisor, as a chief investment officer. I've designed that investment engine. That app is very successful across Europe. I feel accomplished in fintech, and I've been incentivized to put my money in a few paytech applications later on. And that made me thinking about fintech a bit more. Also, our colleague and friend Susanna Shishti published several books on fintech, and I have been asked to be a co-editor of the last volume in fintech series on legal tech. And most recently, I've been teaching fintech. And what I would like to tell you today and share with your students is my experience in teaching fintech last term at Queen Mary University, and we can take it from there. Shall we switch to slides?
Yes, please go ahead.
Okay, I'll start sharing the screen, and I hope tech is working now, and you can see my fintech screen, right?
Yes, we can.
Okay, so these slides will be shared with your students. So this is a quick recap, and you should feel free to interrupt me and ask any questions. So what happened last autumn, it was a simple trial of this fintech elective, which was original syllabus. My problem in accepting this invitation to teach fintech was that there is no standard syllabus for fintech. People still don't teach fintech as a monolith. They would focus on a particular facet of fintech, either payments or wealth tech or Bitcoin, but it's not the same as trying to teach fintech as integrated curriculum. So in the best academic practice, they let me do that on Saturday morning as a pure elective. And everybody was surprised that actually a very large number of students registered. So it was the most popular elective last autumn. and some 70 students completed that. And I left all teaching note slides on SlideShare. So if you double click on a link like this, you will be able, I can do that as an experiment. You will be able to access all my lectures. So something like this will open and you can download them. There is a large number of presentations, etc. So this FinTech syllabus was very popular. Other friends heard about that, and more or less the same content will be offered next year at the same place, Queen Mary, but also at Warwick and Cass. So what I would like to do for you today is tell you what actually this FinTech was, and this is a definition that I've provided for all these universities, and it is how I feel about FinTech coming from investment management. The concepts that I like are in red. What I like behind FinTech is that FinTech redefined money and operations involving money. So it helped people to actually define new types of monies and discover new technologies to transact with money and play with money. And actually, by doing that over the last 10 years, they have disrupted our old concepts like money or consumer retail finance and many institutions. The principal change was the concept of disintermediation, which means that through some of these apps, you can just forget about traditional bank or a money transfer agency. You are able to access money and financial instruments without intermediaries, just basically through an app. So it is direct to consumer or business to consumer type of financial transaction. And by doing that, over the last 10, 15 years, starting with the likes of PayPal a long time ago, it actually promoted entrepreneurship. We've got a very large number of business models, and we are surrounded today by these apps, which means that we are continuously exposed to innovation, financial innovation, with all these apps, which is helping intermediation further, which is also creating economies of scale, transactional costs going down. Clearly, this is a regulated domain. Many startups forget about existence of regulation, and that should be a starting point. And that is why I felt that I should help new students in economics and business and finance to understand how this tech domain is looking now, because there are many subdomains in FinTech, to understand the concept of disruption, and also to understand the data we use, algorithms, software, and at the end of the day, how can we integrate what is happening with FinTech with the rest of our domain? Because management of innovation that is happening across startup space is a challenge for many traditional banks. Unfortunately, there are no textbooks covering FinTech yet, integrated textbooks. The few that I've came across that I can recommend to students are these listed sources. One is a very long paper by Italian regulator Giuseppe and et al. Consul is Italian regulator. It was a very good high-level description that anyone can download and get through. Next one is Shishti, our friend Susanna, and her partner Barbaris. They managed to create a series of books published by Wiley on FinTech. They started in 2016. The original FinTech book has been translated into Japanese and Korean and Chinese. It ended up being a bestseller. And it has been followed by 5 other books on different subdomains. And clearly, it is recommended literature. These books are representing the state of the art over the last 5 years. And I think we will see more textbooks in the future. The only that I could recommend at this stage was a textbook published by Hill that actually is a substitute for a traditional course that we would be teaching at MBA level or in business and finance on financial institutions. So it is fintech not as its own, but actually fintech as a replacement for one of core courses. So that was the starting point, and what I have decided was to split this domain in 8 modules. I started by introducing a concept of digital transformation in finance, where I try to describe the origin of fintech from regulatory perspective. What does it mean when we have Bitcoin as a different currency, all sorts of apps that we can use to move money around, to invest money. This digital transformation is so pervasive and so strong that I can't imagine that we have students without any fintech apps installed on their mobile phones. My usual question is to ask students how many of them are using Monzo, and usually a half, if not 70% of students would raise their hand and disclose that they're using Monzo. So Monzo as e-bank is one of many fintech apps that is available, and the same is valid for international students. Most Chinese students would use Alipay and WeChat pay tech functionalities, which means that traditional banks, as we know them, and these big buildings and portfolios are under threat. And the challenge of digital transformation is well covered by these 2 books. Skinner is the famous one. This is a brand new book. That is his most recent book. He published several books. He started actually discussing digital transformation 6 years ago with a book called The Digital Bank, and it is becoming a required reading for anyone in retail banking or consumer banking. And the very form of bank is changing. So what is Bank 4.0 rather than Bank 3.0, etc.? What is the difference between Monzo and Barclays or NatWest is also something that these books discuss. And it is useful to be reminded that all these people started discussing digital transformation in finance several years ago. They published books. It is just fascinating how retail banking is changing these days and under how much pressure retail banking is, because they're bleeding customers. And this is a huge challenge for traditional banks. So that was my module 1. And in module 2...
On this subject, sorry to interrupt.
Yes.
On this subject of this digital transformation in finance and these new providers, you mentioned Monzo, and most of us have Monzo accounts and Monzo cards and find them very slick. It is interesting to note, and I wanted to ask you what you think about that. It took so many years for actually these new contender banks and contender apps and so on to emerge, number one. And number two, that suddenly now there's a rush. Do you have any explanation for that? Because we've been looking at this for 10, 15 years. We've had online banking for 20 odd years, so that's nothing new. We've had a transformation in the banking system in that less branches, more self-service and so on. But the app business, and we've had apps now for 10, 15 years, apps are not new. It seems that only in the last 1 or 2 years it has really started catching fire, so to say.
Yes, that is a very good observation. And what actually happened in Europe is interesting, because it was European Union and regulators who promoted open banking and who actually created this boom across Europe in payments and the banking. So since April last year, banking and financial institutions are obliged to open up to their systems to enable virtually anyone else to access this data, carry out these functions. So hashtag open banking and regulations like PSD2 created this revolution. And Europe is nicely positioned between China, which is world leading in payment technologies, what Tencent and Alibaba did in ability to move money and accept payments is phenomenal. One cannot imagine the volume of transactions happening in China and the growth of customers, because they're now between, I don't know, 700 million and 1 billion customers on one platform, which means that these systems are much better than Visa or MasterCard, etc. While, funnily enough, United States is lagging because of this integrated retail banking system. It is a very different regulatory regime, and we in Europe are leveraging existence of these regulations that made financial institutions across 26 countries passported and compatible, and that is why an app like ETF-matic is not just focusing on a single market like UK, like for example brands like Nutmeg, but it is doing extremely well across Europe thanks to passporting of this app and thanks to open banking. And Europe is rich. Europe is using a single currency, and e-banks and fintech is doing extremely well in Europe right now.
Which I think brings us to the next module, the regulations platform.
Absolutely.
Finance.
Absolutely, and yeah, absolutely, and that is exactly what you asked. I mean, in European Union, we have enjoyed open banking as a regulatory concept that created opportunities for small startups, and we now can compare strategies in regulatory regimes that actually enabled many people in London and the UK to lead in innovation, because British regulator FCA was very forward-looking, and probably because of better structure of financial systems and of people coming out of investment banking and elsewhere in asset management, it created the excellent background for fintechs to emerge, and businesses like TransferWise, for example, that were created in the UK, and many other businesses are world leading thanks to a good regulator who was brave enough and credible enough to let them use licenses to hold money and move money. All these businesses are very well regulated, and the principle of regulation is something that any startup should consider very early, because you just can't launch your app without understanding regulations behind this app. And books that are only now coming to market on regulatory technologies or compliance are relevant, and I put two of these as recommended readings. That concept is related to something that is very difficult to fit elsewhere in fintech syllabus, which is the concept of alternative finance, which is a concept that is so deep that actually we shouldn't be teaching that as a part of fintech. The alternative finance is basically coming from economics. It is the concept of platform. It is the concept that is explaining what is a market. A market like eBay, a market like Airbnb, even a Tinder, if you like, because these concepts of two-way market or existence of a platform that is matching buyers and sellers is applicable to many functions in other sectors of economy. Think about Uber or Uber's competition. Well, what is happening on the platform? How is price discovered on the platform? When are platforms going to fail is a specialist subject. It is probably better covered elsewhere in economy, in game theory or traditional economic supply demand. But from perspective of fintech, I just had to make these comments in passing to explain that whatever is happening on the platforms, or whatever is called alternative finance, crowdfunding, crowdsourcing, any kind of platform where IT is just an enabler, is covered by some other academics. And I've suggested these two books as recommended reading to understand business of platforms and what is happening elsewhere in the economy. Because you can imagine that alternative finance is wide area, and fintech cannot be just about Uber and Airbnb, etc. It is not actually alternative finance by itself. It is just one little domain where you can be misled that this is a fintech, but actually it is not. It is more alternative finance and platform economics, etc. But one thing that I'm very keen to emphasize with students, and even in legal tech book was considered to be important contribution, is the concept of our identity, verifying who we are, proving that we are who we are, and the concept of digital identity, which is onboarding of customers for these platforms, which in extreme form is also concept of know your client, KYC, and money laundering, is so fundamental that actually I had to dedicate one module, couple of hours, to explain what actually is happening in the background of any apps, how these apps actually verify your identity, what kind of documents are used, how many stages of this process are, which is related to regulations and compliance, but also becomes a very serious research concept, because some people, and this is a clue to understand Bitcoin in module 5 or 6, are worried that concept of identity is still centralized, because we trust centralized institutions to verify our identity, which means that an app is going to consult an institution like Visa or a credit rating agency, and some people actually don't trust these institutions. And the reason why fintech did so well in some forms like Bitcoin is simply because after 2008 we had this fundamental shift in the concept of trust in financial institutions. People became less trustful, if you like. They didn't want to leave their money with the traditional institutions. They wanted to have something that is truly decentralized, that they can always control and have with them. And the concept of decentralized digital identity and these credentials is a very deep concept linked to cryptography and bitcoins. And I wanted to remind students to remember that identity is legal concept. It is a very important concept. It is something that will become even more demanding or complex as we go forward, proving who we are or internet to any other institution. So,
Drago, you're making a very interesting point here, if I may interrupt here.
Please.
In that, obviously, the digital identity in the context of onboarding, knowing your customer, perhaps even AML, anti-money laundering is key. And I think it goes into, it has a whole range from knowing your customer and really knowing everything about that and disclosing this in some kind of centralized or quasi-centralized form, to a disclosing very little information, which is the kind of crypto world and so on. I would like to know from you, where do you think the future will be, in particular, given now uncertainties in the world here? Coronavirus is one, but there are many others where actually we're very concerned about, on the one hand, disclosing our identity, on the other hand, not knowing who it is. Perhaps that's also a disadvantage, because I want to know, in this new world of perhaps being locked up at home, is the other side a genuine counterparty for whatever I do, or is this perhaps a fake counterparty? Where do you think we're going? What is your kind of 2 cents on that?
Oh, Jacob, it's fascinating that actually what is happening today is going to challenge many traditional concepts. I guess the key will be in understanding what public sphere is, or what public finance or public health is, and on one hand, which is going to be represented by, if you like, liberal democracies and our trust in institutions, or not, on one hand, and or privacy on the other hand, which means that suddenly these traditional concepts like are challenged at a very high philosophical level, because you can understand what does it mean to hide information behind, I don't know, HIV or coronavirus, etc. What kind of danger it would be imposing to a community. And it is a very sensitive balance between something that is very totalitarian and centralized with use of force, etc., that one can imagine on one hand, and preservation of democracies, if you like, electronic voting and confidentiality and privacy.
Yep.
From my perspective, from technological perspective, many of these systems are becoming very sophisticated. Just as an example is something called proof of body, for example, or proof of liveliness. When we just imagine that we have to verify that it was you and me in this conversation,
Yeah.
rather than our avatars on some people pretending that they are who we are. Clearly, the big thing we have resolved, because we know each other for more than 20 years. We have very little marginal trust involved, but we can imagine that a stranger on internet to whom we are talking, or as someone in a chat bot, is a very different entity. And that is why some of these apps during onboarding will be asking you to follow a little dot on the screen to prevent someone from actually using your photograph to be onboarded, so proof of liveliness. And some of more sophisticated apps will be going far beyond a couple of your fingertips and fingerprints that you need to show, to actually trying to verify that you've got body, that you are physically available in the front of these apps. So this is very sophisticated. This is involved to biometrics. I don't know what the future will hold in terms of DNA testing, or even some sort of real-time monitoring of diseases and what is going to happen. But all I'm going to say, technology is available. Technology is available to not just hide information, but or make it secret, but also to prove to someone that information that you're disclosing is truthful. We have very sophisticated mathematics behind these systems. One of concepts that I respect a lot coming from this community is the concept of zero knowledge proof, that, for example, you and me can exchange some information or agree on something without actually disclosing what we know. And the mathematics behind these systems is fascinating. If you like, it is sort of Bitcoin mathematics pushed to some extremes. And for our benefit, we should learn to live with this technology and use it for good, not to create some sort of dystopian society. It is a tricky problem, and I wish we don't live under quarantine, but thankfully we use this video communication. This is encrypted, this is safe, we have trust, and this is almost philosophical to make our students think, what does it mean to trust someone, or to disclose some information, to keep something private, etc. But this is all behind the concept of digital identity and verification, validation, that can only become stronger, right?
Yeah. Thank you.
Okay.
Fascinating. I think let's move on. I think the next two slides are extremely interesting. One talking about money and payments, and the other one about blockchain. So you want to go ahead and tell us a bit about the money and payments?
Yeah, that is basically, that should be easy. That should be a breeze because most of our students understand how convenient it is to make a payment or the internet. Probably they don't always pay attention to what is happening in the background. What does it mean to have a credit card number? What actually is a credit card? What is a QR code? What happens when you touch something and this little NFC code flashes, etc. And this is all related to payments. We start with the money. Money is somewhere else, but actually payment technologies is a fascinating subject, especially when we start thinking, what does it mean to pay someone in China for our Alibaba stock? International payments, currencies, etc. It is a specialist subject. There are many books that our students can use. I selected these two more recent popular books to try to make people thinking about the concept of currency. What does it mean to have to invent a currency? What is money, and what is happening with cryptocurrencies or concept of digital money? And discussion of payment technologies easily and very smoothly is providing a roadmap into discussion of blockchain as a computer science concept, which is by itself a complex subject. You need to know something about cryptography and programming. But luckily, there are many books that are aimed at general public. They have been around for several years that are describing this technology that enables you to come up with a long string of numbers and codes and declare that as a money, and funnily enough, use it for transactions because it has got its value. It can be traded, it can be staked, you can get a credit on top of that, etc. Many fintech teachers are simply teaching blockchain and Bitcoin. I wanted to avoid that because to understand blockchain and Bitcoin deeply would require a specialist subject. And it's not a subject that we can simply do at undergraduate level. Or I guess even at postgraduate level. It is a specialist IT-driven subject. There are books. The books by Narayan is a standard book, but it would require a lot of programming and mathematical knowledge, and I wouldn't go in this direction. From Module 5 perspective, I've covered the history of Bitcoin, explaining also that technologies are available to anyone to create any type of digital asset, and that is why we ended up with these ICOs and concept of tokenization for virtually anything, and the whole thing morphed into something crazy, like the concept of paying somebody while playing a video game to buy a little sword or a shield, and for that synthetic artificial virtual object to have a real value and real money is also creating all these manias and make you thinking, what does it have to have a crash or a panic or mania in currency space or virtual currency space? So at the end, I wanted to be very practical and to persuade people to open a crypto wallet to see for themselves what does it mean to have a little wallet and put some money, load this wallet with one Satoshi or any kind of crypto asset, just to make them comfortable with the concept of digital asset or something that is replacement of money, where regulation is moving very, very fast, which means that the most recent reports by Bank of England or Central Bank of Sweden are discussions of central bank digital money, which is going to create efficiencies because we don't need to handle cash anymore. And would make someone thinking about future of money. Now, let's assume that we have money, real money. That brings us to a subject that probably is closest to our heart of asset management and financial management, that is today called Wealthtech. We know that there are many applications that would enable you to trade stocks or invest money or even buy insurance through apps. It is again a fast-growing subject. It is well described by a book by Paolo Cironi, who is a very popular character in Wealthtech domain. And once again, Susanna Shishti's book on Wealthtech. This is probably where the concept of disintermediation in finance is happening fast. It is not just in terms of assets that are being disintermediated, because most of these Wealthtech apps will be using exchange-traded funds, but it is also the transaction or mechanism of investing your money that is changing. Robo-advisors like Nutmeg in the UK or Betterment in the United States or ETF-Matic in Europe are really making small-scale retail investment easier. The cost of carrying out these transactions, the cost of running these apps is really small. It is challenging in future of financial advice and independent financial advisors, because it seems that this is the best way to get some people out of, if you like, underinvestment. And that is one of very rare solutions where you can still have a profitable system or business that is helping people to invest 10 euros or 10 pounds every month in order to create a savings pot, because these systems cost a very small percentage of assets under management or assets being invested. And it's highly efficient, and I just can't think of better solution in financial services to get to tens or hundreds of thousands of euros or pounds as investment. When we have more money, then a proper wealth tech should kick in with a proper wealth. But for majority of people, ability to directly, automatically save money every month through one of these apps is phenomenal, and it is going to change world. It is happening not just in developed world, but also in Africa and Asia, and it is going to result in a better financial system at the end of the day. And we can elaborate on this by far.
Yeah.
And well.
I think it's interesting that you're saying that, because obviously as a Wealthtech professional and chief investment analyst who runs a few hundred million in client money, I'm obviously interested in Wealthtech. Some people see it as a threat to our business. I don't see it as a threat, because I think, as you're saying, is on the lower end, on the smaller scale, these might be interesting solutions, like a Nutmeg or a Betterment or whatever they are. I mean, there are lots of solutions out there. But if you think about it, if somebody is a wealthy or high net worth or ultra high net worth or even a family office, then you definitely don't want to go with these solutions. You want to do the opposite. Either you do it yourself or you go with a trusted advisor. And I think the trusted advisor still has a role to play. Whether there are fee pressures and so on, I think it's another point. And I think that's one of the reasons why I think these platforms are interesting. What I wanted to ask you is with regards to Wealthtech on the higher end, is that I see Wealthtech as a professional, not so much as an academic, but as a professional, in that we use technology in the middle and back office in order to run the portfolios, in order to settle the trades, in order to be able to give information to the client. But as far as the management of the assets are concerned, asset allocation and so on, we do it ourselves, because there is this personal element. And I think now the market crash, the Corona crash, is another test potentially to the so-called standard solutions and so on. Do you have any comment with regards to this kind of more platform business? You might know that here in the UK, around 500 billion in client assets are on so-called platforms, which are simply platforms to hold the assets, so quasi-custodians, so co-funds, Standard Life, and so forth and so on. Have you done any work into that?
Well, my retail work was related to a robo-advisor, and after launching a robo-advisor that is now very successful business across Europe, my thinking is that for small size of investment pots, there is no more efficient solution than using unitized products, exchange-traded funds, having no humans in this loop. The concept of robo-advisor means that algorithm is actually investing automatically your money and rebalancing your portfolios. You have a not small but limited number of portfolio options available. But because there are no human analysts, no portfolio managers, everything is fully digital, end to end, it is far superior for clients that would not make sense for a human financial advisor to cater. Absolutely. Because volume is available. I mean, I can't disclose a number of clients of ETF-matic across 26 European countries, but it is actually very serious 6 to 7 digit number, which is fascinating. But these pots are small, and these are the people who will be, if you like, who should be taken out of poverty, who are young, who need to develop this habit of investment. The next stage for these people will be to get into some sort of hybrid relationship where a financial advisor is going to provide something more than unitized off-the-shelf type of solution or portfolio, understand the client, tax situation, financial goals, kids, marriages, partners, liabilities, etc. And as wealth is growing, when we get into more customized advice, more personalized, when we have a serious tax consequences, and when we need to properly support these clients across total investment portfolio like real estate and proper private wealth, we are in a different space. So I agree with you. We need to understand that volume will be handled by the standardized algorithmic automatic apps. But once these apps start controlling very large sums of money, and with tax consequences and financial well-being consequences, people should get involved. Absolutely, because there is no app who is going to help someone to get from 10 to, I don't know, 100 million of liquid wealth. The problems will be different. But for millions and hundreds of millions of Indians, Chinese, Brazilians, this is a way to go. It's fascinating actually to think that we have underdeveloped wealth management at large scale in China, that we don't have exchange-traded funds that are made in China. We have tech made in China, but the concept of fund and financial services is underdeveloped in that serious market. So
interesting. Let's move on to module number 7, wholesale in B2B tech.
Absolutely. This is actually, that was related to, that is a second part of your question on platforms and back office, because there is a lot of IT machinery happening in behind of financial services, and it is a fascinating subject because this is a discussion of back office, or what is happening on server side. What are these big banks and custodians running? What kind of services and IT is happening on the back end? What is actually in these databases? And the trouble with this subject is that there are no books. People don't teach this. the concept of wholesale IT systems or B2B interactions or I don't know, SWIFT and legal entity identifiers, etc. But there are magazines, there is a lot of news for professionals. We should appreciate that that there is a cloud, that there are some interesting IT systems and solutions that are trying to be resilient and secure. Nobody likes when Monzo goes down or any ATM or and this module was about exactly these topics like disaster recovery and contingency, like one we've got, where we are just hoping that internet will hold up and enable us to use money, that there will be no downtime. And the final week was the response, not just us as customers, but also of businesses, because management of innovation and the concept of startup and the very fact that young people would like to join startups, not just some big boring banks as they've been going for many years ago. And the fact that Google and Facebook and startups are attracting talent is a challenge for traditional financial institutions. And we've seen this trend for more than a decade. We understand the lifestyle and attractiveness of small fintech startups, not just in London, but also in Berlin, in other places, maybe even Shenzhen. And general management perspective, like MBA focused books are available. There are far too many of them that would explain digital transformation and provide some advice to senior management on management of entrepreneurship, etc. I've listed a few of them. One can click this table of content and see these topics. But from formal perspective, there are very few that would be discussing strategy that should be undertaken by a large institution, because we have a situation that Monzo now has got millions of customers, I think 7 or 8 million, which is actually a very large number of customers. Of course, they're still not like the core account provider. The average account size is still small. We're talking about students, young people. I guess there are no people who would be leaving more than several thousand, £10,000 in Monzo accounts. Mortgages are still handled by big banks. But when you think about access to big banking or traditional institutions, the very same functionality, the very same APIs is used by both large players and new players, but we have innovation happening in a small player. What kind of equilibrium will we have? Will, for example, the latest BO application by NatWest succeed in the market or not? What is the strategy of Monzo? It makes a fascinating subject to be discussed at any panel addressing banking and retail banking in particular. There are aspects of banking that will not be easily disintermediated, commercial banking, I don't know, commodities trading, etc. But Module 8, in my view, was about strategies that should be taken by people in traditional finance, and also incentivizing people and students to consider a more entrepreneurial career, because launching a startup is not as difficult or complicated as it has been 10 or 20 years ago, because we have friends who can design these apps. We have a very friendly regulation. All we have to do is to find a little niche, little gap, slightly better user interface, and voila. This is becoming a scale up, and that is a secret sauce behind several highly successful startups, and also understanding why some of them are leaving some markets, like German bank N26 that has redeemed all UK customers to focus on core, I guess, German-speaking countries. There are differences in strategies, and we are going to see this in this decade even more fintech in many other forms, which now brings us nicely to the end of presentation of fintech as it was, and I'm happy to answer any other questions, Jacob, or
Yeah,
maybe to even.
fascinating. I mean, I like in particular the finish, module number 8, strategy and entrepreneurship. Number 1, because as a university, we are very strong in entrepreneurship. We have a pathway which is called Family Office in Entrepreneurship. I myself, I teach entrepreneurship in a financial sense. So I teach the valuation side of entrepreneurial finance. I'm interested in teaching students not how to start businesses, because you need to have the guts, you need to have the desire to do it, but I can give them the tools of what you need to know from a finance perspective, the accounting, the cash flow side, and then whether a business will become profitable. Because in the end, we're doing this, or somebody starts a business in order to turn it into a profitable business, whatever the outlook is. So I think that is very, very timely and very accurate what you're saying here. But I wanted to ask you with regards to strategy, which is obviously also very interesting, because both of us with a banking and finance background, what's your take in terms of where the market would go here? So we have the old traditional players, the RBSs, the Lloyds, the Barclays, the NatWests. And then we have the Monzo, and we have the Starling Bank, and so forth and so on. What do you think is going to happen? Because obviously the big banks, the traditional banks, they're losing market share. They find it very difficult here, but they're very stable. And if you want to have large amounts of money, you probably have it with them. If you want to have a slick solution, you use your Monzo card and so on. Where do you see the market going in terms of consolidation? Do you think that these less profitable, slick solutions will actually be taken over by the large banks, or will they become bigger and profitable and safer? And will they replace the so-called dinosaurs, or do you see any other solution?
Yeah, it is a great question, Jacob. The first thing that springs to my mind is the concept of electronic money institution in European Union regulation, because Monzo and many other fintechs are not banks from legal and regulatory perspective.
Yep.
But what we are asking banks to do for us is something that Monzo is delivering. And you don't need a banking license to behave like a bank. And that was a beauty, if you like, of Monzo and 26, etc. That without banking license, leaving custodial and depository services with big banks like, I don't know, Barclays at the back end, enable this great functionality, user interface, chatbot, help, customer assistance, everything. It was brilliant. Which means that the skin, if you like, on top of core banking systems and core banking institution is an interesting subject. And competition that somebody, as a retail client, is enjoying, where all these apps are fighting for a little bit of our money is fascinating, which brings us that second subject, which is cost of customer acquisition. Because some of these fintechs will never scale up. It is far too costly to market themselves, to advertise, to support client services in many languages, etc., etc. And some of them, to be honest, are losing money and are going to keep losing money for a while. Because it is a low margin, massive business, etc. Now, where do we go from here? And this is a great panel that one day we should be addressing together with Susanna Schisti and Paolo and other people, is which kind of industry is fintech going to follow? Is it going to follow pharmaceutical industry, where big pharma companies, Novartis, Roche's, AstraZeneca's, are buying innovation left and right. Any new molecule, any clever IP behind any, I don't know, coronavirus, vaccine, DNA, etc., is being absorbed in big pharma. And you just can't get rid of big pharma. There are 4, 5 of them in charge of complete pharmaceutical market, and that we know. I mean, that's big pharma, but innovation is not scaled up, if you like. On the other hand, we have a situation in car industry that is being disrupted by, I don't know, hybrid cars and electric, etc., which is also based on standardized components, car parts, OEMs, where we have challenger like Tesla doing something. Yeah, Tesla is losing money. It's an interesting company. Where this innovation is going to come, and how are we going to proceed? How is Volkswagen going to, or Toyota going to respond to challenges like Tesla and many more Chinese e-vehicles, is a different path. Where with fintech we are at the moment is a mix of components like B2B components, APIs, core technologies that anyone can assemble on one hand. On the other hand, we have this user experience, this skin, this advertising, marketing as different channel. Marketing is costly, it is expensive, churn is very high. Talking about my own apps, there are several little icons on my mobile phone. I'm developing my taste in fintechs. I know that you've got Monzo, but on top of Monzo, I have Starling and a few others. And we don't know who is going to win in this case. I mean, we can argue that in some little specialist niche domains, for example, for SMEs and self-employed people, some applications are better than some others. We know how to distinguish between Starling and Tide and the traditional millennium-facing young guy Monzo account. So we are in the middle of this battle, basically. We are, and I feel sorry for some fintech propositions launched by big banks, or even some fintechs that have been sold to big institutions who are going to struggle, who are still wasting money, because challenge coming from bootstrap startups, and ETF Matic was one of them, is tremendous. And maybe we will have more Tesla-like, or I don't know, China-like challenges coming into the market. For time being, I would advise on cooperation, partnerships. Recent news that TransferWise got a deal with Alipay is great news. We are linking these big systems. It was a very clever, very shrewd move by TransferWise, who can move your money in virtually any currency on the planet within seconds. And the more partnerships, the more APIs like B2B standard components we have, the better choice will be for customers. So I'm long fintech for retail finance, because the experience provided by fintechs is great, and efficiency. It is reducing cost of accessing financial services. It is going to help billions of people in India and China move money, create deeper markets, and it is truly news for 21st century.
Drago, thank you so much. That was a fascinating talk. We're coming to an end. Almost 60 minutes, 58.49, 50 seconds. So that was a fascinating talk. Thank you very much for giving us an insight into, obviously, the digital transformation, and the different concepts of money, the platforms, obviously digital identity we discussed, which is very, very important. And then the strategy coming to an end, and your insight and your opinion. I highly appreciate it. It was really very interesting. I'm convinced that Regent's University students and other people who might see that, because we're going to offer this video also on my YouTube channel, going to see them, going to profit from that. A very exciting industry, fintech, wealthtech, whatever we want to call that. But it's the future, and I think the future is already here. and it was a pleasure being with you here on the program. Because of the situation now, it's much better and much safer to do it online rather than offline, in person. I hope that in the near future we can do this again in person, but Fintech will not disappear. Thank you so much, Drago.
Thank you, Jacob.
Be
Looking
safe.
forward.
Be safe.
Absolutely.
See you soon. Thank you, my
Take
friend.
care.
All the best.
Bye-bye.
Bye-bye.